Hey folks, Vic here with your weekly video for the week ending January the 9th, 2026. Happy New Year, our first full week of 2026. So, as you may know, I look after our short-term trading, specifically scalping. That means our entry time frame is the 15-minute chart with reference to the higher time frame 4-hour and daily charts. Now, a lot of people are under the impression that if you're trading smaller time frames, you're going to be getting more trades. Well, that's just not true. And in fact, interesting, the month of December was very slow for the kind of trades that we're looking for scalping. However, the swing traders had more frequent setups and some really big moves on some of the pairs, and just a great month to finish off the year for the swing traders. This is what the service that Darko runs. But scalping's a different animal in many ways. So, for example, a lot of times when we take on a scalp trade, it's with very, very small pip risk. They can be like 10 or 11 pips, or it could be more. It could be more like 20 pips or whatever it is. And we have very defined ways of assessing exactly how much pip risk we're going to take on each trade. So we know ahead of time how much we're going to be risking. But no matter what it is, the key to staying in the game is to not risk much of your trading account on any one trade. We recommend no more than about 0.5% of your account on a trade. You can still do very, very well with that. But here's the thing with scalping. If you're only risking, say, 11 pips, like in the example I'm going to show you right here, you only need to get up 11 pips to have a 1-to-1 reward risk trade. Like that's pretty easy to do if you do it right. Okay, it's not guaranteed, of course, but we go for much bigger moves than that. Usually you can get a 2-to-1 reward risk or higher, but not always, of course. And this is where trade management is so terribly important. So in this video, I'm going to show you the kind of setups that we look for. And then I have some really important comments to make at the end. So let's have a look at this trade. This is on the New Zealand US dollar pair. And the setup was actually on Monday, the 5th of January. And what we do is we want to mark off strong levels. And this up here is a strong level, and this down here is a strong level. Why? Because when price came down, and when it hit this level right here, hit this price right in here, it bounced. And it bounced up and actually took out this high and made higher close and higher high, leaving this low behind. This low left behind is an advanced pullback. Okay, this is Darko's advanced market flow concept. And so we mark that off. Actually, we mark it. I'll tell you how we actually mark it. We mark it on the closing price rate like this. The reason it was down a bit lower, I'll show you right now, is because you see this wick. We can go down and get a little bit tighter idea of where we want price to come down to. And that was right here. You see this? So if we use the closing price, the lowest closing price on the 4-hour chart, that's down here. Beauty. Look where price came to. So when it comes down, when it takes us out and comes back, especially for the first time, you can expect a bounce. And sure enough, that's exactly what it's done. Now, how do you get in on that? Well, there's different ways, but I'm going to show you the very nice, objective, mechanical way that we do it. And this is the one that happened today. And what happened? What we do is first of all, price has to come to the level. Secondly, it's got to give us a swing break pattern, what we call a swing break pattern. Let me tell you what that is. I'm going to see if I can get fancy schmancy here and get out a drawing tool like a pen. Let's see what happens. Ooh, yeah, baby, I think I got it. So you see what happened here. Price had been coming down and then rallying up. And it came down like this. And it took out this low right here. You see that low? So this becomes a very important level. We want it, at this point, we don't know if it's going to go up or not. But when it breaks this high right over here, that's what we call a swing break. And it's an important sign that we are probably going to be going higher. And all of this in here is meaningless. This swing from here down to here, when it went straight down, that's the important high. All of this price action is contained within this high and this low. Do you see that? All right. So then, what we want to do, once this high is established and price starts to come down here, you can measure from the very low to the very high after it broke this swing, and by a Fibonacci retracement level. And it's just a kind of an idea of where to get in. I almost always buy the 79% level because we use what's called a natural stop, which would be under here. And in fact, we'd actually look back a little bit further than that, and because sometimes these are very, very shallow, and you can get a little bit better stop placement. It just allow for a little bit more movement against you if it happens, because it'll quite often come down and retest this level, which is exactly what it did. So by buying at 79%, you have less pip risk and a far easier profit targets. Okay, you can get your profit targets quicker. The downside is that if you don't, and Darko always likes to buy at 62%, and they're both really good. He's been very successful just buying 62%. The downside of buying 79% is if it hits 62 and bounces up, you miss the trade. I'm okay with that. Some people aren't. So you pick your poison, as they say. So in any event, the buy down here is at 57.47. And we always watch for red flag news. There was none of that going on. And, down it went, filled here, and look at this move up. This is really is really important now. When you get into a trade, now what are you going to do? Are you going to panic because it goes against you and jump out of the trade just before this happens? I'm sure that some of you can relate to that. Or do you just calmly sit by because you know where your stop is and everything's fine? So that's just trading maturity and having a trading plan. If you don't have a trading plan, don't even start trading. You're just going to ruin everything and lose money. If you've risked 11 pips, and that's all it took, by the way. If you put your stop underneath here, in fact, it didn't even really need 11 pips. This was about from the entry here to the bottom of this candle was about 8 pips. You can add another 3 pips onto that for slippage or whatever. So give it 11 pips risk. You had 11 pips right up in here already. And in fact, let's just measure that. From the entry, which was 79%, which is right about here. Let me see if I can get it sort of there. There was 11 pips, 11 and a half pips. This first extension, the 127% Fibonacci extension, that's 22 pips. That's a 2-to-1. And by the way, look left. That's a pretty good level to be thinking about taking profit. You see, when you hit levels of resistance on the way up when you're long, get risk out of your trade. Logical levels. Here, up here, came out to this wick here. That's the 162%. That's a 3-to-1 reward to risk trade. That's a fantastic trade. Maybe your trade management is to trail the stop. When you get a move like this, obviously it looks like, wow, why would you not do that? Well, they don't always go like this. So like I'm saying, have a plan in the first place. Let me make a few comments, and these are really important. Remember at the beginning of this video, I said that there haven't been a lot of these swing break trades. Let me ask you this. How many of these trades would you need to take, right, in a month or whatever, to have a great return in a month? This one trade alone this actually went up to about a 4-to-1 reward risk right here. Now, of course, there's no way that you would know in advance that was going to happen. That's hindsight. But we did know in advance where this level was and where this level was and where this resistance level was here and here. So that's where having a solid game plan is critical. Like, you need to know in advance how and where you're going to remove risk and or take profit. Are you going to remove risk once you're up 1-to-1 reward risk? Or will you take partial profit then? Or will you let it run to see if you can get a 2-to-1, maybe a 3-to-1? Or are you going to trail a stop like I just showed? See, like, these are all things that can make trading complicated if you don't have a predetermined trading plan and a way to handle this before you trade. Having that plan, and most importantly, sticking to that plan, which ain't easy, right, greatly removes emotion from your trading, which is huge because trading is mostly psychological. We're going to continue to be on the lookout for these kind of trades, and we will take what the market gives us. That's it. And we'll stand aside and sit on our hands when the market doesn't give us anything. But we'll take these trades without deviation, no FOMO, fear of missing out, no feeling the need to get in somehow because we're looking at our charts, intently. Play the odds. Stick to your trading plan. And you're giving yourself then the best chance for consistent profitability. You don't need a lot of trades to do well, especially these little scalpy ones here that you get high reward risk very, very quickly. Okay, but you do need the right kind of trades. Obviously, the ones where the odds are really tilted nicely in your favor. All right. Thank you so much for listening in today. By the way, before we go, listen, make sure you listen to our podcast. Darko has done some great interviews, quite a lot of them lately, with our members, our actual members, and really interesting to hear about their journeys, their struggles that they've had, what they're doing to overcome them. I can promise you that whatever issues you're having with your trading, you are not alone. Trust me. Everybody goes through issues when they're learning how to trade. So I think you'll love those podcasts. There's a link to them in the text below this video or in the email that you received. So I just want to thank you again, everyone. Have a great weekend. And from all of us here at Forex Minute, we wish you all a great 2026.